let's get some leverage. First off, read this disclaimer carefully. We will look at the energy business in this video. We will look at the bullish alternative is this one. And that's if you want to have some 2x bull exposure to the energy sector, 78% from the 52-week low. Quite some distance away from the 52-week high. If you are feeling more bearish, you have this one, 52-week low distance and 52-week highs. XLE is the underlying, and that's the unleveraged, and then ERX bull and ERY bear. When we look at the seasonality, we do see that November, which is the month that is approaching, it is one of the strongest months for the XLE. So that is supportive of a more bullish case. Let's compare the XLE against the S&P 500, and we want to have a bunch of years. The energy sector, it's been struggling, but we do see something interesting. We do see that the later part of the year is very strong. November is actually it is the weakest month, but December is one of the strongest. So basically, you could make a strong case for the later part of the year. So let's now look at the charts. We start here by analyzing the XLE, because that one will inform us about the leveraged alternatives. So this is all the history we have for the XLE, weekly data points, and we get a pretty big picture about a major bull market that has died and become super bearish. If we measure the distance from the high here, the all-time high, like that, to the all-time low, that is minus 76%, so that's an extreme fall. You could make the case that we have a monstrous head and shoulders pattern, a monster shoulder, monster head, and a monster right shoulder. This is gargantuan. This is a head and shoulders pattern that's been forming over decades. We did, however, break the neckline, and we have seen a very significant sell-off. Long term, I do think that the fossil energy business is a dying industry. But this is where it becomes very tricky for the XLE, because the XLE is not a fossil energy ETF. It is an energy ETF, which means as the alternative energy businesses, companies become more impactful, they are very, very likely to start to replace the fossil fuel companies in this ETF. Hence, even though I am very bearish long term on fossil fuels, that doesn't mean that I am bearish on the energy XLE ETF. So this is a tricky thing. However, let's look here at the charts. So what should we do? Should we be bullish or should we be bearish? I think that we have seen a big sell-off. Even recently, after the lockdown recovery, this one just unraveled. We are approaching some oversold levels here on the RSI. Historically, you can see that oversold levels, they usually actually trigger rallies. Though the rallies can be quite temporary, only lasting a few weeks. If we do use some leveraged ETFs, like the bullish one here, that could be a substantial rally. The bears are still in control. They are the ones who sort of laid down the law here. But I think that the bears have used most of their energy, at least temporarily, and that it makes more sense now to look for bullish opportunities here for the XLE. But we don't have any significant bullish news yet here in the charts. And there's a minus 48% negative correlation with S&P 500. Looking here at the daily data points, we get a bit more nuanced picture. It is still, we have this rounding topping pattern here. We don't see the bull stepping up to the plate yet. But I do think that it makes more sense to look for bullish opportunities here than bearish. Okay, so let's now look at these leveraged products and do some analysis. Let's do it like that, and then we take the XLE here, like that, to do the statistical correlation. Here is the ERX. That's the one if you are feeling bullish. Long term, there is a 96% positive correlation with XLE. That is very good. Looking at the daily data points, also a 96% correlation. That is what we want to see. So that's great news. Let's look at the bearish one, the ERY. Here we have a minus 61% correlation. Now that means that there is some significant tracking error, and minus 70% here on the daily data point. So there is some significant divergence here. So that's a bit. So the bullish one seems to work better at tracking the XLE than the bearish one. Here you can get some information about the XLE. Another way to trade in a leveraged manner is to get into the options market for the XLE, which works pretty well because the XLE is extremely liquid. Here you can see some performance, minus 51% year to date. So definitively the energy sector has been a major laggard. But that's also why you could start to build the case that there could be some money shifting into the energy sector, basically because it is down so much. So let's look a bit at XLE. So here you can see first let's look here at the expense ratio, 0.13%. That it's pretty cheap. The PE 28, dividend 13.36%. That's a juicy dividend. I mean, the dividend alone here is a pretty good case. Let's look at the holdings. So you can see certainly that the fossil fuel business here is dominating. But this is one of those things that certainly I do think will change in the future. Hence, the case for the XLE is very tricky. It's very complicated. You see, because it is not the fossil fuels select sector ETF. It's the energy select sector. Here's the market cap breakdown, dominated by big companies. Here is the sector breakdown. Big shock, almost 100% energy. Region, completely dominated by North America. Market tire, country. So certainly there could be more diversification here in this ETF, but it is very focused. Okay, so to sum up my take here on the XLE. As I indicated, the problem with the XLE, as far as analyzing it, is that it is currently a fossil fuels ETF, which means that when you look at the chart now, you are seeing the death of the fossil fuel business. But that will, as the alternative energy companies become included in the XLE, that's when it changes. Hence, the XOP would be, the best way to sort of analyze the fossil fuel business. Then again, the ERX and the ERY, they are based on the energy sector. Okay, so that's the key thing here. I do think that there will be bullish opportunities here on the horizon. We have not seen the bulls step up to the plate yet. The bears have been very aggressive. They have almost ravaged the post-lockdown rally. But I do think that there will be some money shifting into this space soon. So have the energy sector on your bullish radar. And whatever you do, of course, you don't fight the trend, and may the trend be with you.